Thank you so much once again for those joining us. So welcome to Crypto Unlocked. And today we'll be discussing the high rewards and risks of investing in digital assets with Revix. And with me here is Sean Andrew Sanders, and he is the CEO and founder of Revix. So Sean, just tell us a little bit about yourself and also about Revix, what you do, all the exciting stuff that you do.
Yeah, sure. So a little bit of background on myself. I'm a finance nerd. I started out my career working for a hedge fund based in Seattle. It was a quantitative hedge fund. That sounds really cool. I didn't enjoy it for the 6 or 7 months that I was there. I then went to a listed company called Subvest. They actually became our first investor in Revix. They're a listed specialty investment firm, JSE listed, that is. I then went and worked at a family office based in the UK. And yeah, I got to work alongside some really remarkable people, did everything from mergers and acquisitions to early stage investments. I had loads of fun doing that. And then I started to get this idea in my mind where I was like, you've got all these really great investment platforms in the UK, Europe, across the US. And I was like, Africa doesn't quite have the same number of investment platforms, and the different types of platforms that exist, they're not that great. The UI or the user interface and the user experience, it needs a lot of work. And it was sort of at the same time that you had the crypto market that was really blowing up. And I'd been involved in the crypto space since about 2014. And I was thinking as well, going, people are just speculating in the crypto space. They're going out, they're just buying Bitcoin or just Ethereum, or maybe one of the other cryptocurrencies. They're taking high risk, single name bets rather than approaching this asset class like they would with stocks or like they would with bonds or real estate, where you own this diversified portfolio. And I was like, maybe you can sort of marriage both worlds. You can bring together the index fund based approach to investing, so this diversified, low cost, longer term investing approach, together with this enhanced investment platform. And that could then enable Revix to grow across the continent. And that's exactly what we did. So 4 years ago, we went out, we literally launched with just one product, which was our top 10 crypto bundle. And essentially this bundle, just like a low-cost index fund, provides diversified exposure to the top 10 cryptocurrencies. And that's the top 10 largest cryptocurrencies as measured by market capitalization. Since then, it has been a remarkable journey. We've grown the team substantially in Cape Town. We've now hired internationally as well. We've hired in the UK. We've onboarded over 45,000 users since launching. It's been just an incredible journey. There is never a dull day in the world of crypto. And you guys all know that, right? You've seen the headlines. 2022 was a year. It was an incredibly challenging year. I have absolutely no idea how I'm not gray or bald, but there are platforms that emerged from last year even stronger. And I think, you had the FTX debacle. This is the massive elephant in the room when you're talking about crypto. You need to confront these things head on. One of the big things that we've been calling for in the space for such a long time is regulation. You need regulation to develop. You need consumers to be protected. And, we as Revix, we want to be at the forefront of this. So we have gone out and completely separate to our crypto business, actually got a Cat 1 and Cat 2. So that's a Category 1 and Category 2 FSP license. So essentially, we're able to offer now traditional investment products in South Africa in a fully regulated fashion. And we'll be first in the queue when you can actually apply for your crypto asset servicing license. So, that's really our appeal. We want to have these diversified, more responsible sort of investing products and naturally do right by our consumers with, a more secure investment platform.
Oh, wow. Thank you so much for that, Sean. It's like you're just taking me with you. I like the drive and the passion for what you do. Thank you so much for that insight. And maybe just give us a little bit of insight on digital assets, right? Obviously, people hear crypto, they hear digital assets, they hear a whole lot of terms, blockchain, and they just mix everything together. And I think that causes some form of confusion. So if you can just give us an intro, just a little bit of an intro, just a short intro on digital assets.
Yeah, sure. So digital assets is this encompassing term for cryptocurrencies, stable coins, non-fungible tokens, NFTs, security tokens, commodity-backed tokens, and then there's still other, good 3 or 4 other categories that you would sort of classify under the digital asset umbrella. So essentially, these are generally assets, or let's just use the term asset actually more broadly rather than going into securities more specifically. But these are assets that sit on a blockchain. So you would have, let's say, a cryptocurrency that sits on top of a blockchain. You'll generally have a commodity-backed token or a security token that also sits on top of a blockchain. And the reason that you have these digital assets that sit on a blockchain is that you ultimately want to remove intermediaries. So, people always get caught up on blockchain technology. They go, oh, this is complicated. I don't get it. But the real thing to understand here, it's almost like comparing, the thought process to the way the internet works. You don't have to understand how the different protocols work on how information is sent and, received. You need to understand what the internet can do. And with blockchain technology, you can ultimately remove a lot of intermediaries from many different processes out there. So if I was looking at, let's say, transferring funds, which is, I guess, cryptocurrency, like if you're looking at the very basics, the payment aspect of crypto, if you were to transfer value, regardless if that's through a commodity-backed token, like a gold-backed token that sits on a blockchain, or a dollar-backed token, like a stable coin that sits on a blockchain, or even Bitcoin, you can make a payment directly from one party to another without the requirement for intermediaries. Now, if you look at the traditional world, and you can apply this in so many different ways, whether it be the insurance space, the brokerage space, the list goes on. Pretty much all financial services are looking to be disrupted by digital asset technology more broadly. Even, traditional stock investing that you would, go to the likes of the JSE or New York Stock Exchange to engage with. Digital assets are coming in there because you're looking at the fractionalization of shares. And the fractionalization of shares where you can trade directly with somebody else without an exchange needing to be involved. So this disintermediation of intermediaries becomes really powerful. And I was just about to mention, if you look at the payment space, you've got banks involved, you've got credit card providers involved, you've got, acquirers involved. There's so many different providers and they all take a little fee when a transaction occurs. So if you look at a credit card transaction, that costs, in the best case scenario, sort of 1.5% to 2%. Normally, 3.5% to 4%. For a payment, ultimately it's just digital information being transferred from one party to another. I think, you'll look into the future, our kids will laugh at the fact that you had to pay so much for digital transactions. It's almost like paying for an email. Why would you do that? And I think, that's the sort of space that we're moving into, but in all these different areas, not just in the transfer of value.
Absolutely, absolutely. So I think we're already getting some questions from our audience, Sean, and I think that's a good sign. So guys, please feel free to ask questions. That's why we're here. And it could be anything, right? It could just be something that you've heard out there and you're not sure about. Sean will be happy to answer that. And I think, Sean, before we get into the Q&A, I know you'd mentioned something about user interface, right? I think that's another thing that scares a lot of people away, because when they think of investing, they think about crypto, they think about all these asset classes. It's like, it's overwhelming, and usually the interfaces out there are not that friendly. So maybe just give us a little bit of maybe a talk on the Revix user interface. How easy is it to use?
So I need to kind of move back and maybe just lift my top a little bit here. Anyway, I'm wearing a Revix t-shirt.
Oh, nice.
The whole point of, I guess, the name Revix is it stands for Revolutionary Investment Experience. And this goes beyond just crypto. We're looking to launch traditional products on our platform in the future as well. That's traditional investment products. But the idea of changing that user experience, and this is not just, again, in the crypto space, but more broadly across the investing world, that's why we exist. So we want to enable everyday people to easily grow and manage their own wealth. We don't think that you need a financial advisor. Well, you may be at the right time you do, but not all the time, to be able to help you invest and save and, properly manage your money. So that's where we come in. So if you go to, the Revix website, you can sign up for an account. It's very easy to do that. It just takes a couple of minutes to verify and fika your account. And then you can go ahead and save and invest. And you'll see the user interface is really appealing. We don't use jargon. You won't see candlestick charts. You won't see complexity or tickers or any of the other financial nonsense that exists out there. We really are built for sort of the everyday person without a financial degree. If you want to go and trade, we aren't potentially the best platform for that. We're more focused on long-term investing. You can come to Revix and you can buy any cryptocurrency or a crypto bundle and then sell a single second later or a moment later if you'd like. But we aren't, as I said, sort of the platform that wants to encourage trading. We really believe the most long-term value in the space can be from the buy and holding. And the data that we have at least supports this. If we look at our top performing customers on the Revix platform that have been with us, for the last 4.5 years, that's how long we've been around. The best customers, not by 5 or 10% returns. I'm talking by 50 to 250% returns are the ones that have literally just bought into a single product, one of our bundles, and held on to those products for an extended period of time. And it is boring, right? Because people come into the crypto space because they want excitement and they want the volatility. Yeah, exactly. You want the adrenaline rush. You want to log into your account every day and, dopamine hits you. But, that Red Bull approach to investing isn't necessarily the right way. And I mean, again, the data sort of speaks for itself. The long-term buy and hold approach, it's boring. I know it's the tried and tested, and it's the thing you hear from your financial planner, but it is the way we believe as well that you should be investing in the crypto space.
Awesome. Thank you. So we've got a couple of questions, actually 3 questions. So there's one from Northhands at Kundini, and this is what it says. Hi guys, thank you for creating this platform and discussion. My name is Sylvia. I'm the founder of SaaS provider, HubWorks. How do I approach Sean if I'm building a solution built on blockchain infrastructure for asset-based blockchain?
That's fascinating. So asset-based blockchains, again, one of the products that we have, I alluded to this earlier, if you look at a commodity that sits on a blockchain, right, this could be even a property or a title deed to a property that sits on a blockchain, you can have this transferred, potentially in the future from a title deed standpoint, even right now, you can have this transferred to another party without intermediaries involved. We have Paxos Gold on the Revix platform, which is a gold-backed token, so physical gold that's backed by, or should I say a token that's got a physical ounce of gold backing each and every token. Now, it's quite fascinating. You've got gold bars, and I'm sorry, answering this in a very long way, but you've got gold bars sitting in London Brinks vaults, so the most secure vaults in the entire world. And Paxos, which is a New York trust company, kind of similar to a banking charter in the US, they've gone and they've essentially tokenized those gold bars. So there's 400 ounces to each gold bar that exists. And there's these tokens that you can essentially buy, and you have a fractional ownership of a physical gold bar. And if you get enough of these tokens, I believe, and I stand to be corrected, I think it's 32 tokens, I might be wrong, you can actually redeem those tokens for a fraction of the gold bar. You can actually physically get that receipt of ownership, which is quite interesting. Now, we've offered this on the platform, so it just makes investing in gold far more affordable. You can imagine in South Africa, buying physical gold, holding that in your safe, that carries loads and loads of risks. There's insurance costs around that. There's custody costs, even implied custody costs. And having something like this, you remove a lot of those intermediary-based costs. So that's quite valuable. So if you want to reach out and get in touch, head over to Revix's homepage. So that's our website. And then just reach out to the customer support team. They'll be able to pass on my details. And yeah, I'll get back to you via email. I am generally pretty good on email. So I think that's the best way to chat with me.
Thank you so much, Sean. And I think that's kind of merging the old with the new, right? Gold and digital assets. That's really exciting. And we've got another question here from Natalie Cook, and says, what are the factors that make investing in digital assets risky and potentially rewarding?
So the price volatility is, I suppose, the most obvious risk within the investing space. This is all investing spaces, not just crypto. But because the crypto market is such a nascent market, and you've got a lot of retail investor involvement, you do have a lot of volatility. There's also a lot of leverage in the crypto space. I mean, this entire industry was built with trading platforms. So it's got a gambling-esque sort of mentality as a bit of an industry, which is changing. Don't get me wrong. You've got bigger banks, institutional players sort of entering the crypto space, but you do have just a lot of leverage and a lot of trading. And that means that sort of when you see price moves, they can be pretty steep and pretty extreme, which results in the headline grabbing. Bitcoin's up 10% or Ethereum's down 12% today, which is generally quite a bit higher than what you would see in the stock markets. From a potential reward standpoint, I mean, the crypto space is undeniably the top performing asset class over the last decade. There hasn't been an asset class that went from being worth less than $100 million, all the way back in 2012 to now, $1.2 trillion. I mean, that's an incredible annualized return. And, if you look at how this market's grown over the years, sure, we had the likes of 2022, an absolutely terrible year for crypto. 2018, also terrible year for crypto. Rewind to 2015, another terrible year. So you've got these boom and bust cycles. And you've got a whole load of cryptocurrencies during these bust cycles that land up going extinct. And again, that's sort of the approach of why we've built these bundles. Because if you're looking at, building a long-term crypto portfolio, you need a portfolio that updates with the crypto market. So our crypto bundles will automatically update every single month, just like an ETF or just like an index fund, which removes the cryptocurrencies that decline in value and then includes the cryptocurrencies that increase in value and get added to the bundle. And I mean, ultimately, our goal is to say, listen, over the next 5 to 10 years, we want to give you the highest probability or the highest chance of owning the star performers in the space. How do we do that? Well, you essentially try own the top of the market, the star cryptocurrencies.
Absolutely, absolutely. And then there's an interesting question, actually. So I think you touched a little bit on FTX, but it's not about FTX. But I think it ties into that. So it's from Anonymous, and it says, due to many exchanges showing signs of going bust, I have recently decided I'm going to self-custody. I'm going the self-custody route. If you don't own your keys, you don't own your crypto. What is your opinion on this? And also, maybe just before you answer that, if you can just talk about self-custody for those that maybe don't know what self-custody is, because we've got like a mixture of investors and non-investors in crypto, kind of 50-50.
Yeah, sure. So self-custody is ultimately where you look after your private key to your cryptocurrency. So if you imagine, your cryptocurrency doesn't exist in the physical world, and you get the key to utilize that cryptocurrency, it's known as a private key. And you can either choose to look after this yourself, or if you engage with a Revix or a crypto exchange, you can then rely on that platform to look after this cryptocurrency key for you. If you buy a stock on the Johannesburg Stock Exchange, you're the legal owner of that stock or that share, but there's another platform that is custodying it, being the prime broker that your brokerage platform is using. And I mean, in the traditional space, custody has grown massively. It's a very complicated business. It requires high levels of licensing with the FSCA and other regulatory bodies. And within the crypto space, because there haven't been regulations, you just haven't had this high level of sort of custody requirements put in place. And that's the reason you've seen the mismanagement of keys across crypto exchanges worldwide. I mean, every single week you hear about a new crypto platform that's gone bust, and there's just really poor risk management that is essentially happening at these firms. There's poor financial management. I mean, with FTX, it was a joke. It completely undermined this entire industry. You didn't have a CFO at this business. Didn't seem like there was any risk management taking place. And I mean, it has spilled over and, it's caught the eye of the regulators. So you are seeing the regulators move into the space quite aggressively. And I'm going off on a bit of a tangent here, but you have seen the regulators move into the space quite aggressively. And the thing that they are starting to care about more and more, which is good and it protects consumers, is the custody aspect. They want exchanges and platforms like Revix to really care about how they custody the crypto on behalf of their users. And you've seen now the emergence as well of licensed professional custodians. So the likes of Copper based in the UK that you can engage with either as a crypto platform or as an individual, and you can custody your cryptocurrency with these professional providers. And in the next few years, every single platform will have to have a locally regulated custodian that they're engaging with. That's the way we see this market developing. In terms of self-custody, so I think when you become more advanced in the crypto space, self-custody is great because you can remove all the intermediaries. And that means that you can take your cryptocurrency off a crypto exchange or a crypto broker like Revix, because we're slightly different to a crypto exchange. We are more of a crypto broker. We actually execute trades across multiple cryptocurrency exchanges and crypto liquidity venues. I'll get more into that a little bit later in the webinar. But the risk really with self-custody is if something happens to that private key that you have control over, your crypto is lost. There's no way to recover it. And that is a very big risk for a lot of people. It's a big risk in South Africa. That's the first thing. The second thing is the moment that private key is shown on a device that's connected to the internet, if somebody had to have compromised your device or may have compromised your device in the past, they would have been able to see that private key. And that means your cryptocurrency could be removed without you ever knowing about this. So I think, when you become more advanced and you really think about the security and the custody of your crypto assets, then maybe self-custody is for you. But I think for the vast majority of the population, having a licensed crypto custodian that you're engaging with, which will become the crypto exchanges and crypto brokers, that's the better longer term approach. So I think for most customers, that's just the easier approach as well.
I totally agree. I think I tried self-custody, but I couldn't go through with it. And I think it has its risks as well. And I think as we learn more about crypto investing, it will make it easier for us. So we've got, I think we can take these two questions. Okay, this is from Chris Hudson. And it says, good morning all. Can I ask Sean what his thoughts are on liquidity mining as a passive income on my money? Sean, there's a question for you regarding liquidity mining.
Yeah, so it's quite interesting. So you could actually go and let's say you've got some Bitcoin and some Ethereum. So you could go and actually take that Bitcoin and Ethereum, and either you could utilize it in and I'm going to get a little bit technical here, in an AMM, so an automated market maker. So this would be on the likes of Uniswap or another sort of decentralized finance protocol that exists out there, and you can earn a yield on that. You just need to be quite careful that you're using a reputable partner in the space, because you've heard about all the crypto hacks that have taken place, and those are generally happening with the crypto protocols that haven't had thorough due diligence done or haven't been really battle tested. So I would be careful with that. But if you know what AMMs are, that's the first step in this direction. If you utilize the likes of a Uniswap, even a Binance AMM, these are pretty reputable. They've been in the space for quite some time. So that's one option. Another thing is with the likes of Ethereum, you can actually set up your own node, right? So you can actually stake your Ethereum and start earning a yield on this. This is something that we are exploring as Revix. We'd like to be able to earn, or we'd like to be able to offer our customers the ability to earn a yield on their crypto assets. And that'll be the likes of Cardano, Ethereum, Polkadot, Solana, all of these cryptocurrencies that have staking blockchains. So yeah, I can go into more detail here, but yeah, I think I could be carried away a bit. So I'll just pause there. If there's any other questions, Chris, yeah, let me know.
Okay, I think there's another question from Anonymous, and it says, how do you conduct thorough research and due diligence before investing in digital assets?
So I would say, there's the 80-20 principle here. So I'll talk about the most important things that I would recommend somebody look at before they invest in this space. Number one, go look at the platform that you are engaging with. Where are their directors? Who are their directors? That should be disclosed. Next up, look at the management team within this business. Okay, are these reputable people? Can you actually find them on LinkedIn? What are their backgrounds? If they come from this magical place that isn't known to anyone on LinkedIn and they've just appeared out of nowhere, that's a warning sign, right? They should have a history of building businesses or working in the financial services space or the technology space, and I think that's really critical. Reach out to the customer support team, get feedback from them, ask them the hard questions. How do you guys custody your crypto assets? What customer security protocols are in place? What do you do with my data? How do you protect my data? See how they respond to you in all those different ways as well. I think then last but not least, actually do a test. So don't go and deposit a tremendous amount of money with an unknown sort of crypto provider. Go and actually, I will note just one more point after this, but actually go and make a small test payment. So, fund your Revix account or fund whatever other account you want to engage with, make a purchase, make a sale, and then withdraw the funds. The small fees that you'd pay for doing that's, well worth the due diligence exercise of going through all of this. And then I think, yeah, last but not least, it's also, if you can diversify across the crypto space, and this isn't necessarily, looking at the platforms themselves, but this is actually saying, okay, if you're investing in this digital asset space, this emerging space, sure, with high return potential, we must all just note that there are high risks. You don't get the annualized 150% return investing in this space, which is what it's been, over the long term, without considerable risk. A 2022 drawdown, which was, 70%, 74% peak to trough. I mean, that's a brutal drawdown, right? So again, diversify not just in the digital asset space, that's what we're promoting with our crypto bundles, but also diversify across asset classes. So invest in crypto, invest in stocks, invest in real estate, and try and build that diversified portfolio. It's again, boring financial advice, but that's the approach that I would take as well.
Very true. And also, don't sell your house to invest in crypto, right?
Yeah, no, true.
Okay, so I have a question for you, Sean, and I think you just, it's regarding what you've touched on right now. So how do you think market trends actually affect investing in crypto? And is there any strategies that Revix employs to maybe protect customer funds?
Oh yeah, we employ a load of different strategies to protect customer funds. Gosh, I don't even know where to begin on this. So on the one side of it, you've got a risk management committee that exists within Revix. That committee meets pretty much on a monthly basis, actually more often in most months, and they would review the risk policies and procedures that we have in place. So this is everything from data security to wallet security to customer transfers and customer flows. You're looking at every single facet of the business and you go, okay, are the different areas of the business working in the way that they should be working? Are there any risks that have been identified? How are we going to be mitigating them? And this becomes this continuous process of refining the different areas of the business. It also means relying on banking partners, relying on external consultants as well to come in to try identify risks. And naturally, the likes of Revix and many other crypto asset service providers out there, security is the most important thing. Ultimately, we don't exist unless you're able to build trust with customers. We know that, right? You have a single customer that can't withdraw their funds, or you have a single customer that loses their funds with you. There is a massive outcry, right? Your platform goes down with those sorts of things. And we know that with Revix. So, making sure all of that is sorted is incredibly important. From a custody standpoint, you want to engage with reputable, well, and ideally regulated. It depends. In South Africa, you couldn't be regulated as a custodian, but you ideally want to be engaging with those sorts of parties. We're actively looking at a major bank in South Africa, and we're working quite closely with them to actually launch a locally built and locally licensed crypto custodian that would be where all of our customer assets would then sit. So that's then on the crypto custody side of things. In terms of the actual user protection as well, I think that's the other important area here is, when somebody logs on to the Revix platform, they can deposit cryptocurrency. They can also deposit fiat currency like rands. And what happens quite often, and this is certainly seen a lot more on other crypto platforms where it's incredibly easy to, deposit funds and withdraw funds. It's where you would have somebody that hacks into your bank account and looks to clear out your banking funds, or perhaps even scams you into making a banking transfer. And then those funds come onto the Revix platform. And it's our job to have the alerts and the systems in place to detect some irregular activity and to go, hey, wait a second. This isn't the normal activity that we would see on an account like this. This is not the normal way that you act in accordance with your prior behavior. So let's flag this account and let's make sure that this withdrawal isn't processed. And I just cannot tell you how many times over we've had customers that have had their main bank accounts with Absa, FNB, Standard Bank, you name it. Their main accounts have been compromised, and they try and move rands into the Revix platform and then withdraw using crypto, because naturally you can withdraw from the Revix platform with Bitcoin or USDT, and we catch these customers. And it's quite frightening when a user realizes, hey, listen, my bank account was the one compromised, and it was Revix that was finding out about this. So these are just some of the ways that we look to protect users. I guess in summary, you've got the crypto custody element and looking after customer funds. I alluded to that a bit earlier, but then it's also actually how do you protect a customer account based on their activity as well.
Absolutely. And then does Revix provide its own liquidity, or do you have like external liquidity providers?
So this is the one thing that we've undersold ourselves on massively over the years. So I want to finally sell Revix for this.
Please do.
So when you go to a Luno, and I can see Malcolm, you've asked a question regarding this, but when you go to a Luno or you go to a Vala or you go to a crypto exchange, there's loads of them all over the world, right? You're going to a single venue to trade in different cryptocurrencies. Generally, they don't have crypto index-based products like what we have. But you would go there and you would have only the order books that exist on this particular exchange. So if you wanted to go, let's say Bitcoin to Rand or Ethereum to Rand or even Bitcoin to Ethereum, there would be an order book that exists on this exchange for those different cryptocurrency pairs, or fiat currency to cryptocurrency pairs, or vice versa. And this means that you're reliant on the liquidity on that exchange, right? If there's not a lot of liquidity on that exchange and you're trying to engage in a larger transaction, it's either going to take you a lot of time. It could take quite a bit of time, or alternatively, it's going to cost you a lot in slippage. So when you actually execute that trade, because there's not a lot of liquidity, you'll eat into the market depth. And that means that you'll lose some return when actually engaging in that trade. Now, what we've built is a smart auto routing system. And we've had this on the Revix system since day one. If you go in and you engage with our platform, you actually see this happen in real time. But you click buy on the Revix platform or sell of any of our products. And what we'll do is we'll connect to a variety of South African crypto exchanges. We'll connect to global exchanges as well. And we'll look to get you the best cryptocurrency prices possible. So if you went with, let's say, our top 10 bundle and you said, right, I want to use 10,000 Rand to buy into this top 10 bundle, we would actually go and find the best prices for Bitcoin, for Ethereum, for Cardano, for Polkadot, for Solana, for every standalone cryptocurrency within that bundle in real time. So you'll end up executing across multiple cryptocurrency exchanges. Now, what's the real big benefit beyond just having better price execution? Because that's the first big benefit, of course, is getting better prices for your trade execution. The second big thing is you're not reliant on any single crypto exchange. So FTX goes down. Unfortunately, we weren't integrated with FTX, but FTX goes down. That's just one of the liquidity providers that you're engaging with. And that from our standpoint as well is a big advantage, especially when you're engaging with bigger financial players. They want to know, hey, listen, I can execute across multiple different venues, and I'm also not reliant on any single one of these crypto exchanges. So, Revix gets regulated. Revix does everything properly from a compliance standpoint, and your reliance then is on Revix rather than a crypto exchange. So that's one of the big focuses that we have as well.
Thank you so much for that, Sean. And I think you've mentioned regulation quite a lot during this discussion. And it just shows that regulation is important. And obviously you take compliance very seriously. And I think that's one of the red flags when it comes to investing in crypto. So thanks for highlighting the importance of regulation. And there is also another question here from Anonymous, and it said, is it important to diversify your portfolio when investing in digital assets? If so, how do you do it effectively?
So there's many ways that you could diversify in the digital asset space. You could go and build your own portfolio, right? So you could buy some Bitcoin, buy some Ethereum, go through the list. And then you can just remain quite diligent. And every single month you can come back, or every single week if you want, every single quarter, come back, look at how those cryptocurrency balances have changed. If a cryptocurrency has declined in value, look at buying some more of that or removing it from your portfolio entirely. And if a cryptocurrency is done really well, having the diligence to sell some of that. I mean, that's the basic premise. It doesn't matter if you're investing in crypto or stocks. It's exactly the same thing. You want to have this diversified portfolio that you're not overly concentrated in any single name. So you don't want to have too much in Bitcoin or too much in Ethereum or one of the other names. And our approach really would be to say, okay, you can do that yourself, or come to a Revix and buy one of our bundles, and the crypto bundle automatically updates for you. So you remain diversified across the market over the long term. And that's, our key focus, diversification, investing in the crypto asset class rather than trading. I sound like a broken record, but I really believe in what I'm preaching. Yeah, this is, in my opinion, and the data shows it again, that this is the sort of longer term best strategy for investing in every asset class, including crypto. In terms of, Malcolm, your question around how do we move crypto from Luno to Revix, as well as your prior question around whether or not Luno's a reputable platform. Luno is a phenomenal platform. The guys that are running that platform, this is a competitor of Revix in some respects. So I'll be completely honest. I think they've done a great job navigating what's going on with their parent company, the Digital Currency Group. It's not been easy. The Digital Currency Group took a very big knock. Billions of dollars of funds were lost with Genesis, which was sort of their other prime business that focused in the brokerage space. And Luno, it seems, and I don't have any inside information on this, but it seems they're gearing up for a listing. So in the future, they'll be looking to list on some international stock exchange. Maybe they'll surprise us and go on the JSE. Very unlikely though. But that's what they're working towards. So, if you're looking at the South African market, Luno, Valor, Revix, these are reputable platforms. And I'm not just selling my own book here. We speak on WhatsApp groups, we speak quite regularly with the regulator, and you can see that. And, there's a camaraderie amongst the South African players as well, because we actually are the ones that get the most impacted when you have the likes of the MTI saga that, played out many years ago, or the KG brothers, where people lose millions of rands, with all these scams and all the rest. So in terms of moving your funds from Luno to Revix, if you want to do that, you can either do that by, engaging in a Bitcoin transaction. So you can actually transfer your Bitcoin from Luno or from any other exchange to Revix. You could also transfer funds from Revix to Luno if you wanted to, using crypto. And that could be in all of Luno's cryptocurrencies. You can move over, or alternatively, you can move rands into Revix. So it's whatever's easiest for you.
All right, thank you, Sean. And for those who just joined us, so welcome to Crypto Unlocked. And today we're discussing navigating the high rewards and risks of investing in digital assets. Yali Wasoko, your moderator for today, representing Tech Central, and I have Sean Andrew Sanders with me here, who is the CEO and founder of Revix. So we still have some questions from the audience. And I think we touched a little bit on the market trends. Sean, unless you'd want to answer that again. So I think you spoke a little bit on which market trends and news affect the value of digital assets, and how can you stay informed and up to date on these trends. So maybe it can tie into a question that I wanted to ask regarding the information on that Revix provides, because I think the digital asset market can be very overwhelming, especially with, I think there's over 20,000 cryptocurrencies out there. So maybe do you have like some information that you update, maybe monthly, weekly, daily on your platform that people can look out for?
Yeah, so all the pricing data on the Revix platform is live. I mean, literally, I'm not talking like your stockbroker live where it's delayed by 15 minutes. I'm talking it's live. You log in, you'll see the real-time execution prices, the real-time portfolio price, and that's just the service that we offer. In terms of updates and I suppose focusing on market trends and all the rest, we release a Revix monthly roundup. This goes out, it talks about the major trends in the crypto space. It's essentially a newsletter. So if you want to get this newsletter, just sign up for a Revix account. You don't even need to verify your account or make a deposit. You'll just form part of our mailing list, and then you can get access to that Revix roundup. We'll also talk about how our bundles have performed. We'll look at which cryptocurrencies have moved into the bundles and which have moved out. You can also go to the Revix website. You can go take a look at some of the different products that we have available there, take a look at the different bundles, download the fact sheets. Yaliwe, you mentioned how I focused on compliance and regulation a lot in this discussion. I mean, of course, this is front and center of mind. You can actually go take a look at our risk disclosures that we have as well. I think are quite different. Certainly in the South African crypto space, it's different, when you start looking in the UK and elsewhere, but we'll actively say there is risk involved with investing in this product. We don't want you to come onto the Revix platform and have a bad experience where you lose money and you weren't aware of that. I mean, there is risks investing in crypto without a doubt with that long-term, upside opportunity. So if we can get a little bit long-term greedy, which is, I suppose, what we are, and we want to get, customers to come on board, to have a good experience with us, and then to be with us for, decades, not necessarily just months. I mean, that's really our main focus. In terms of the crypto space, if you're looking at sort of the best indicators of what exactly is going to drive market performance, it's actually past performance, as weird as that may sound. And I know that's the worst financial advice. So, I'll say this now as well, past performance shouldn't necessarily be taken as the best indicator of future performance. But in the crypto space, what lands up happening is the prices in the market land up increasing, like what's happened this year. I mean, the crypto market's up about 60% since the start of January. And you all of a sudden have a bit more crypto news, front pages and all the rest start getting filled with Bitcoin hitting, I guess, yearly highs. You start hearing more from the crypto platforms that are spending a little bit more on acquiring users. And this results in sort of this bubble up effect in the crypto space. And, you land up having a lot of leverage in the crypto world as well. So when markets land up moving in either direction, because there's so much leverage, it sort of gets exacerbated to the extremes, which means you get really big moves up and really big moves down over the different time periods as well. And if you just look at, we've seen consecutive month-on-month increases in the crypto space since the 1st of January this year. And I can't remember the exact percentage. I was actually just looking at it if I had it in my notes in front of me here. But if you look at historic performance and you look at a period where you've got 4 consecutive months of positive returns, you're looking at north of, and I'll actually find this stat and I'll share it before the end of this podcast, but over 250% returns in the subsequent year after that 4 months increase in the crypto market. So again, you can't necessarily say, listen, this market's going to increase 250% because past performance doesn't necessarily mean that you'll see the same sort of future results. But, again, it's sort of playing into this narrative of when the crypto market starts moving in a direction, it generally continues in that direction until a point that it doesn't. It sounds so obvious to say it like that, but that's just the truth as well.
Also, I think I would like to know a little bit more about the bundles. Are there any new exciting products that you're launching? And what are these bundles about? I think I've heard the bundle more than once in our conversation. I think the audience would like to know too.
Yeah, sure. So our crypto bundles are essentially like index funds in simplistic terms. If you've ever bought an ETF or you've bought a mutual fund, it'll be exactly the same experience in purchasing our crypto bundles. So you're essentially getting multiple cryptocurrencies through a single investment. And the reason we built these bundles is that it's quite a lot of work to actually go and try create your own crypto portfolio, stay up to date with the market, also just the rebalancing dedication that you need on a monthly basis to actually go and say, okay, this cryptocurrency has declined in value. Let me remove it from my portfolio. There's no emotion involved with that, right? You need to actually just be able to do that. Oh, this other cryptocurrency is increased in value. Great. Let me sell some of that. That requires just a lot of work on a month-to-month basis. So what we like to do is we like to, essentially automate that entire process. And we do this using digital tools. So we've automated the entire investing and rebalancing process. So you come along, you essentially invest in one of these ETF-like products, one of these bundles, and then you get diversified exposure to the crypto space. And now you can sell out of that investment immediately, or you can hold on to that investment for an extended period of time. We naturally look to incentivize longer-term investing because we believe that's the better thing in the crypto space. And then in terms of new bundles, so this is the first time we'll announce this. We've got a top 20 bundle that'll be launched in a month's time. So stay tuned for that. We then have 5 other cryptocurrency bundles and a whole bunch of standalone cryptocurrencies that are on the Revix platform. So if you don't want to buy a bundle and you actually want to get exposure to, one of the top 15 largest cryptocurrencies, you can actually go and get that exposure on the Revix platform as well. Our flagship product has been our top 10 bundle. So this is the top 10 largest cryptocurrencies in the crypto space. And then you've got this new bundle that we've launched. We actually only launched it for the first time yesterday, which is our blue chip bundle. Now, the blue chip bundle, as the name suggests, enables you to get exposure to the blue chip cryptocurrencies. So these are the largest cryptocurrencies of each of the largest crypto sectors that exist out there. So, just like in the stock market, you've got the technology sector and you've got Apple sitting at the top of that. You've got the e-commerce sector and you've got, Amazon sitting at top of that. You've got the energy sector with BP sitting at the top of that. And you can go through the list. There are sectors within the crypto space, because cryptocurrencies are not all looking to do exactly the same thing. The likes of, let's say, Ethereum is looking to achieve something very different to the likes of Bitcoin, which is looking to do something very different to Chainlink. So these would be sector leaders in different areas. And so ultimately, you've got these different sectors, which include, exchange tokens, smart contracts, Web3, the metaverse, all these weird terms you've heard about, DeFi. And we ultimately place the top performing cryptocurrency, which is the largest cryptocurrency in each of these sectors, into a single bundle. And the past performance of this bundle has been astounding. It's the reason that we created this, because ultimately people want to own the success stories of tomorrow, right? And our bundles are made to try increase the probability that you'll actually own the top performing cryptocurrencies in the market. And the returns of our blue chip bundle since the start of 2021 have been over 815%. Right. So it's been a remarkable performer over that time period. And if you compare that to the likes of Ethereum, Ethereum was up about 140%. So there's a very big difference there. And Bitcoin was actually down 1.5% over that same time period. So what you're getting is a diversified bundle portfolio by investing in this blue chip bundle that has a lot of high return potential, which is, I guess, why a lot of people enter the crypto space, with the diversification benefit of owning a bundle rather than buying just a standalone cryptocurrency.
Thank you, Sean. So I think we'll be coming to the end of our webinar, but before we do that, we'll take a couple of questions. And for everyone that is interested in learning more about the Revix bundles, visit the Revix website. We've posted a few links in the chat, and I think it has all the information regarding the bundles, the Revix website, the social pages. So please feel free. And we'll also be putting up a poll before the end of this discussion to just ask for your permission to actually send you more information on what we've been discussing today and more. So there's a couple of questions for you, Sean, and they're both from Anonymous. And the first one says, we've seen stablecoins deviating from their value in an extreme way. So USD was an exceptional circumstance as its value was determined in a very different way. Do you think the future of stablecoins, okay, I think I just lost that. Do you think the future of stablecoins is bright? Do you see a world where all governments use CBDCs? So there's a question on CBDCs and the future of stablecoins. Over to you, Sean.
So stablecoins are, for me right now, the most exciting area of crypto. If you've ever made a cross-border payment, right, using a traditional bank, right, especially in South Africa with exchange controls, you've just seen how slow and expensive that transaction can be, especially when you're transferring small amounts. And then when you go and actually make your first stablecoin payment, right? So let's say you buy a coffee from somebody, you buy a coffee for somebody and you need to, or they want to pay you back, right? Ask for that maybe in a stable coin at some point in time, and they can make that payment to you. You'll see it takes a couple seconds to receive that stable coin and it costs next to nothing. And that's really the big value here. International payments are expensive. Credit card payments are expensive. I'm still pretty shocked that, you've got the really high costs that you have associated with payments. And this is changing, but it's changing very, very slowly. And I think stablecoins can really drive a significant change within the space. We do, however, still require a lot of sort of foundational work to be put in place so that bigger businesses can actually then go, okay, let's offer stablecoin deposits. There's also a regulatory requirement. Again, you need regulations to be in place and effective regulations to be in place in order for this industry to sort of grow. And you have had the likes of UST, and this is getting over to the next point, next part of the question there. You've had the likes of UST. You've had even USDC recently that lost its one-to-one peg. You've had questions around USDT, which is another stablecoin, Tether, remain, questions around whether or not it's actually one-for-one backed by dollars. And I mean, these questions need answering, right? And the stability of these different stablecoins, fortunately Circle came back, they also need to be better managed over time. So, you're definitely seeing enhancements in the space. There are still risks dealing with stablecoins, but I see the future of stablecoins to be incredibly bright. I mean, that is sort of the evolution of money. And you can imagine, and now this gets into the CBDC side of things, which are central bank digital currencies. I mean, you could imagine how we have a society in the future with smart money. So right now, even the EFTs that you make between different banks, they're pretty dumb, right? I mean, the payment happens. There's nothing else you can do really around that. Maybe the bank can try recall the payment. You have to fill out, manual paperwork and all the rest. If you look at how a central bank digital currency can work, you've got the benefit of, okay, well, maybe you can restrict what exactly this money can be used for. So, if you're thinking about tender payments, you can make the money smart. So, hey, listen, this tender payment can only be made to this party. And if the money is used illicitly, it gets recalled. It actually gets clawed back. So that becomes quite valuable. If you have, let's say, social grants that are giving out, ensure that the social grants don't go to gambling sites or don't go to alcohol stores. That becomes really beneficial. On the other side, you do have the privacy concerns. With smart money, you can potentially track people. And that's really the big risk there. So, this is an exciting space. I think pretty much every major central bank around the world, and I think China's leading the charge on this, having actually launched their central bank digital currency, and it's live. I mean, you can actually use it in Beijing. But really, I think this is a space that's growing. Central banks are heavily involved in this. And I think all I can say right now is watch the space. There's a lot more to come.
There's a question here, which I believe would apply to both, obviously, those that are looking at investing in digital assets and those that are already investing. And it says, how do you manage risk when investing in digital assets? What strategies can you use to protect your investments?
So again, you've got to sort of look at this from many different angles. Is it price risk that you're looking to protect yourself against, i.e. the volatility of the crypto space? That becomes very difficult. Sure, you can hedge your transaction, but then why into the crypto space to begin with? Maybe if you've got a big position in the crypto space already, maybe you want to hedge that. So, there's the interest rate hike that potentially will be coming today from the Fed in the US. That'll impact the crypto markets. That'll impact all markets. And if you want to maybe look at hedging your positions, or you wanting to engage in somewhat more exotic strategies, you can actually reach out to Revix as well. We've got a private clients division that's able to help structure sort of derivative portfolios and all the rest for you to assist in this particular area. But I think for most people that are, joining the webinar and listening today, if you're looking to manage your risk, it's just making sure that you're working with a reputable partner. If returns seem too good to be true, they generally are. You shouldn't be promising future returns, of 20, 30, 40, 50% a year. In the crypto space, there's a lot of uncertainty. Everything can happen, and it's just about managing those risks going forward. And what we're advocating for over the long term is a regulated space, that's more involved with the banks rather than less involved. I know that's not the thing that you want to hear from the crypto guy, but ultimately you need sort of the traditional financial world and the crypto space to come more together if you really want this ecosystem to grow. And that's what we're driving.
Thank you so much, Sean, for that. And I think we're coming to the end of our webinar, but are there any last words that you'd like to say to our audience? How do they reach you, and anything else that you think they need to know before we go?
So I was recently over in Hong Kong, and I got told that I'm not sales focused enough. I'm quite a practical guy. I like to give you the numbers. I like to give you the facts. So I want to be a bit more sales focused. And, I suppose I'll end the webinar from my perspective, at least here, on saying that, when we launch a new bundle on the platform or any new investment product, whether it be a standalone cryptocurrency, a token backed asset, or a bundle, you can go and you can actually invest in that product completely fee free. and that's buy free. So you can go and you can invest, 150 Rand, or even if you feel like balling 1.5 million Rand into that product, and you won't pay absolutely any fee on the purchase. So if you did want to dip your toes in the crypto space and you wanted to experience what our blue chip bundle is like and how it works and how the rebalancing process works and all the rest, you can head over, you can download the Revix app. You don't need to enter any promo code when you sign up. You can also, go and, once you've registered your account via the mobile app, you can open up our web app. So that's the desktop app that will show you your portfolio on your desktop. And then you can monitor your portfolio, but you can invest completely fee free. And that's what I'd like to just drive at the end of the presentation today. People have always gone, I'd like to get into the crypto space, but there's the fee. I don't really necessarily want to be paying that. So for us, beyond just having low fees for this, we actually have the fee free opportunity investing in that bundle. And then maybe just the last point from my side as well is, if you're looking at getting into the crypto space, and I have said this prior in this podcast, just think about this from a long-term standpoint and think about this as an investment that complements other investments in your portfolio. If this is the first investment that you are making in your entire life, go and start small. Crypto market's not going to run away tomorrow. Sure, the price might go up 10%, it might go down 10%. That's the nature of this beast. But starting small and investing over time, it's the tried and tested strategy. It works, and then build that diversified portfolio over the long term. You want to be retiring one day knowing, hey, listen, I was a smart investor my entire life, and I started as early as possible. And trust me, if you in the investing world like I am, you see guys get absolutely wrecked and girls get absolutely wrecked by investing using too much leverage, overly concentrating in certain positions, getting scammed. If you can avoid those sorts of scenarios, right, you'll be in a far better position later in life.
Thank you so much, Sean. There's a question that I'm tempted to ask you. And it's coming from the Q&A, and it says, why does Revix only support Bitcoin mainnet and tether Ethereum cryptocurrency withdrawals? And I think this should be, we've come to the end of the webinar, and this should be our last question.
Yeah, so anonymous, whoever you are, you've caught us out. I would love to be able to offer, Bitcoin Lightning or Bitcoin Liquid deposits and withdrawals, as well as Tether. There's so many different blockchains that you can be, running Tether on top of. Unfortunately, we actually just haven't built the functionality to have all of the different, blockchains interact with the Revix blockchain, or the Revix application. So we are working on this. We want to launch these additional options. Just to also give you a bit of context, 99.9% of our customer flows come in the form of Rand deposits and Rand withdrawals. We don't have a lot of cryptocurrency deposits or cryptocurrency withdrawals. And, we're trying to drive this. We want people to be depositing crypto and withdrawing crypto. But for us, I think because we're sort of this investment platform, people definitely, tend to focus on Rands. So watch the space as well. That is coming at some point in time in the not too distant future.
Thank you so much, Sean. And thank you everyone for joining us today. So this was the Unlocking Crypto webinar, and we were hosting Revix today. So thank you for the wonderful insights. Thank you, everyone. Until next time. Bye.
Brilliant. Thank you, everyone. Take care.